Ladies and gents, welcome back to another video. So in this one, I'm going to be doing a breakdown on USDCHF and some price action that has happened today on Monday, the 14th of November. So getting into things, let's have a look at the prior week. So the prior week was extremely bearish. We had this huge bearish candle. And the reason why that happened is we got a run of these highs up here. We also tapped into a prior untested order block. Now, the reason why this area is significant is because it ran out some highs, and in doing so, it then made this entire push to the downside. So, as you can see, big push to the downside. We then get our retracement in price before raiding these highs and then making a decline. So, as far as targets go, we have this one, which price already took out. So, that low, the old weekly low, and then we have this old weekly low, which it looks like price is going to magnet towards now. So dropping down onto the 15-minute time frame. So this is more intraday sort of time frame. 15-minute, 30-minute works perfectly. And let's just start the week. So we've got the start of the week there on that red line. We've got Asian session. Let's mark that out. Asian session here. Cool, marked out. Push price forward. So as we get into London session, we take out the Asian session low, get a nice bounce from there. Ideally at this point, what I'd want to see, so we've taken out the Asian session low, so this means this is going to be triggering in sellers at this level. We're then going to take them out. So ideally I'd want price to go to the other side of the range, and then look to make a decline from there. So we see that first, then we get a nice push up. Cool. We then take out this high. And then once we've taken out the high, notice we also hit into the body of this 30-minute candle here. Cool. This is actually the order block on the 15-minute, so that's the order block there. We've got the 3 consecutive up candles. Before the push down and the break structure. So that's our order block, and that's where it starts on that level. Also notice how I've left on this black line on the chart, which is, we just actually put it on the low. Cool. So we've left that black line on the chart, which was one of the lows that we took out previously, and that can sort of act as a bit of confluence for this trade here. So we then push back up above this high into this order block, and this is ideally where I'd be looking for shorts, because we've taken out the sellers, breakout sellers, we've pushed up, then we're going to induce some breakout buyers at this level, and then ideally continue on down towards this target down here, which was the weekly low, that one there, that weekly low. So let's have a look on the 5-minute. This is where I'd be looking to execute, enter trades. Cool. Get rid of that. Play price forward. So you can see we do get a rejection from this this order block. You could jump onto the 1-minute. There might be some form of entry in there, but for me, this is where I'd be looking to take trades here. Okay, so notice what has happened here. We get this push up into the order block. We actually create a new order block. Let's just confirm that on lower time frames. See if there's anything else. Not anything too striking. Like you can see there is a 1-minute entry there, but I'm just going to avoid that for the sake of this. We then get our push down in price action. We create some equal lows in here, so, or some semi-equal lows in there. Could have been your entry up there. Price then decides that it wants to decline. Looks like there's some more opportunity for re-entry. Now, this to me would be the ideal place to get in. Reason being is because we've broken some structure to the downside. So we could have gotten on that 5-minute order block, but that wasn't ideal for me. So let me get rid of this price action. Now we've broken structure to the downside, I would consider this area for entry. And in the New York session, we get that push up. So we've created a high of the day. We're looking for continuation in New York, and then look to take out all the rest of these lows for the day. Just push price on, and you can see we make that decline. We take out some more lows, and we keep on pushing further to the downside. Now, realistically, the reason why I'm showing you this is because it's the same principle which I've shown over the last 3 case studies. It's the take out both sides of the range, induce buyers and sellers, like so, and then continue in the original direction. So there you go. We've got breakout sellers. Then we get push up. That takes out those breakout sellers. Then we've got breakout buyers, push up. Then this push down takes out those breakout buyers, and then we get a violent move to the downside. So this essentially is what's happened here. We've got the breakout sellers at this level, Asian range. Then we've got the breakout buyers. Cool. Hit into the order block, get some confirmation, get some confluence, and we've got high probability trade entry towards the downside. Now, let's just imagine we did take this trade and we took it off an order block up in here, like so. Let's just have a look at what the potential risk reward would be targeting the weekly low. So it's 1 to 9. Not saying that that's what I'd personally take. I'd look to take some profits off at this level because there's some obvious lows there. Price could push through that and then reverse. And then next take profit level would be these lows around here. And then finally, that weekly low. So that is the price action breakdown on USDCHF. Bit of waffling done as well, but I hope you took something from that, a bit of value. And I will see you guys in the next one.